Hey traders, in today's video, we're going to talk about swing trading using multiple time frames, multiple strategies, and give you guys a heavy dose of trading psychology. Hey guys, Akil Stokes here. Welcome back to another video. First and foremost, thank you so much for everyone that attended our Trading Edge workshop. We've been doing events like that for, about 8 years now, and I can honestly say that was the best event that we've done. If you didn't have a chance to attend, or maybe you weren't able to catch all of the days in their entirety, make sure you check out the recordings. They will be up for a little bit longer. There's a link below that you can check it out at. In today's video, I want to share with you a clip from our workshop of the swing trade that we took, because I think it was a very awesome lesson on not only how to trade using multiple time frames, but also using multiple strategies. And of course, we gave a big dosage of trading psychology and talked about the mistakes that many of you guys are making. So I hope you guys enjoy, but before we kick off the video, make sure you do me a favor. Hit that subscribe button if you're new. Make sure that notification bell is hit as well. Also, hit the like button, share, and leave me a comment. That is the best way you can support the videos that we're doing here, and I would be much appreciative if you did so. All right, hope you guys enjoy. So let's take a look at Euro Yen. Well, let's take a look at Euro Pound first, because this is one that has an advanced pattern formation on it that I'm using for something else. We're going to start on the daily. So Euro Pound daily, if you're following along. And we're going to delete all this stuff. So we go through a 4-step process here at Tier 1 Trading. Just like we talked about routine and checklist, we go through a 4-step process in trading called IPDE. Look at that, Max is ready, my man. IPDE stands for identify, predict, decide, execute. This is a very crucial part in doing consistent analysis. Now, what do you think I want to identify? What does identify mean? Identify the trend, yep. Not necessarily the pattern. Create a bias. Naomi says, what are we doing? What is the market doing? Matthew says, market structure. Yeah. I want to ask myself the question, what is the market doing? What has the market done? Where is the market at? So in this particular situation on the Euro Pound, right, I can say that the market price has come up to a level of previous structure resistance. And what has that previous level of structure resistance done? Has it been violated? Has it held? It has held. Based on the information, knowing that it is held, I can then go to the next step of my 4-step process, which is the P, which stands for predict. If I identify that the level of previous structure has held, what is something that I can predict? Well, I can't necessarily predict the continuation in trend, no, because we haven't violated that level. Can I predict a potential reversal? Yeah. Perhaps we're going to see a potential reversal. So I know two things from here, right? If I am a trend trader and I'm predicting a potential reversal, am I interested? If I'm a trend trader, someone that trades the trend, and I'm predicting a potential reversal, am I interested? No, not at all. However, if I am a counter trend trader, well, as Steven says, why? Because if I'm a trend trader, I only want to be involved in the trend. If my prediction is that the trend will not continue, is it something I want to be involved in? Those are good questions, guys. And again, it may seem silly. This is something that I struggled with. Again, I told you I was a trend trader, guys. When I started trading, I was trading a trend continuation strategy, and I couldn't identify a trend. So it's not a dumb question at all. I lived it. I traded this strategy for years without truly being able to determine a trend. So one of the, and again, I laugh at myself. One of the key factors I need to recognize is this. If I'm a trend trader, I need to be in a situation where, if I'm a trend continuation trader, I need to be in a situation where I expect the trend to continue. So if I identify that previous structure has held, the level in which I need to see violated in order to predict the continuation of trend has not been violated and it has held, I don't necessarily want to be a trend trader. So if I'm a trend trader, staying out of it. No interest, on to the next pair. If I'm a counter trend trader who's looking for reversals, now maybe this is something that's more interesting. Right? So as we dial down, or I'm going to go a little bit quicker with this. As we down to the 240 chart, I see that the market is putting in a potential reversal pattern. Now, I don't expect all of you guys to notice, especially if you're brand new, but what's forming here is a classic reversal pattern in the market called a head and shoulders. Have you guys ever seen that before? Could be a potential site for you. You guys ever heard of a head and shoulders? It's a classic reversal pattern. I'll draw it out by hand before I show you guys in the chart. But it's when the market does something like this, right? The market is in an uptrend, right? And I think we can agree that we were in an uptrend here on Euro Pound. Would 100 out of 100 traders agree? Yeah, right? What did Akil say was the basic rule, right? Very basic. Bottom left to top right. Darn right we're in an uptrend. But a head and shoulders pattern is something that forms when we're in an uptrend, and basically the trend has come to an end, right? The trend is your friend until it ends. And what it does is it puts in a formation that looks like this. It puts in a lower extension typically. We get a very deep retracement. We get a move like this where the market refuses, right, to violate our previous structure highs. And then we start to see a reversal. Make sense? Just the basic concept. Again, we're not teaching this right now. It's always tough doing live trading because I trade so many ways, and I try to do it in a way that's not going to confuse many of you guys. But just, does that make sense? The basic concept, the trend has ended. It's exhausted, right? So that's what we're seeing right here. We're seeing the market move up. We created that left shoulder. We have our head right here. Keep in mind, this is the head that tested previous structure highs. We came back down. We have that deep retracement right to this level. This is what's going to be called our neckline of the head and shoulders. Right? You can connect the dots there if you want. And what we're currently doing is we're putting in a right shoulder. Now, I don't know if this is going to be a valid head and shoulders until we violate this neckline. And violating this neckline would be no different than what? Violating that outside return. So when I trade head and shoulders, I prefer to wait until the violation and then look to get involved. But we have something interesting happening at this area. If we dial down to a lower time frame, right? So if we go down one more time frame to the 60, we actually have something pretty interesting happening here. And this is good. This is a good example of combining analysis. All right. If we isolate this, I'm going to bring on my pattern tool just to make life easier for me. Following up on our conversation on advanced pattern formations, here's what we had this morning. X to A to B, B to C, and we get a CD completion right here. Right? 91.82. This is a bat pattern. Now, there are many ways you can look at this. You can trade this as a bat by itself. If you did, it would have hit targets already. Something you can do as a trader is you can combine your analysis. This bat pattern completion also occurs where? Think about the bigger picture that we just talked about. Also occurs where? And again, if you're newer, just sit and watch. This is probably a little bit more experience. I don't want you guys getting overwhelmed. It appears at the right shoulder, or what we would project to be the right shoulder. So what I did this morning, I'll go back to the 240, was I used this advanced pattern formation as an opportunity to get involved aggressively into a head and shoulders pattern. You guys see this? This is called combining strategies. It's something that you can do as you kind of gain more experience in the market. I'm taking a strategy, which is advanced pattern formations, which I showed you on lower time frames, which you can use in consolidation in its own right. I'm taking advanced pattern formations. Again, I'll go back down to the 60 and show you. And I'm combining it with my overall analysis and using it as a way to get in for a bigger trade. Does that make sense to everyone? And again, the whole theme of this is to show you that anything is possible in trading. And the goal of trading is to make it yours. The goal of trading isn't to trade like me. It's not to trade like Gabby. It's not to trade like Charles or Jason or Darren or Anthony. Is to take all the concepts that we teach, right? We don't just teach strategies. We teach philosophy. Is to take all the concepts that you teach, and once you become a well-rounded trader, you can use these different tools in different ways. It's not just like, hey, I have a hammer. I can use this hammer for one thing. All I can do is hit nails. You could use it for many other things. And in this scenario, I did take some profits off the board, but I kept a partial position on for the bigger head and shoulders pattern, for the projected reversal, which I would expect to come down to this level and come down to this level. And so far, it's off to a good start. We need to see it break this neckline. That would be a very good sign, breaking this neckline. But at this point, the market is moving in my direction. I'm not sure if you guys caught it, but I did roll my stops to break even. Do you know what that did? What did moving my stops to break even do? It took away all the risk. Not only does that help me financially, not only is this already a profitable trade, I cannot lose money on this trade anymore, but mentally it's helped me. Because one of the things that gets a lot of traders in trouble is they see the money and they start freaking out. Some of you are freaking out right now, I bet. How many guys were watching this and we were down here fighting the 91 even handle, a very high psychological number, and you're like, Q, you were up 75 pips and now it reversed, and look at that long wick and now you're only up 50. Admit it, how many of you guys did that? How many guys are freaking out right now? How many guys, if you were in this position, would have just, I'll take the rest of the profit off the board? Do you see how calm and collected I was? I'm calm and collect for a few reasons. One, I completely trust myself and my plan as a trader, right? There is no individual, like Jason mentioned yesterday, there's no individual trade that has any effect on my trading. It's all about consistent execution over time. This trade means nothing. It could be the biggest winner in the world. It could be the biggest loser in the world. It means nothing. Zero emotional investment in this trade. That's one. I understand that. And that takes time. Again, this is easier said than done, but this is the trading psychology time. This is shifting the thought process from outcome over process to process over outcome. This is a good trade because I followed my rules. And I know if I consistently take good trades, I'll be on the right side of things. But something that helps, especially for newer traders, is putting yourselves in a position where you can't lose. One of the hardest things to deal with is not only just being up money or what you think is up money. You're not up money until you actually exit the trade. But one of the hardest things to deal with as a trader is being up money and then watching that money go away, right? What's even harder than that is when you're up money, you watch that money, which you think is yours, go away. Your stop loss is still above your entry, and you know that there's the opportunity for you to do what? For you to lose money. Let me know if you've ever been in this position, right? Let's say this thing reverses. Let's say I didn't roll my stops. Let's get this off the screen. Also, personally speaking, here's a word of advice. Live room members, you know this. I never watch open P&L. So if there's anything you take from this, never watch open P&L. This will drive you crazy. 42, 43, 41, 43, 42, 45, 40. It'll just drive you nuts, right? Out of sight, out of mind. I don't like looking at open positions. All my live room members know that. I don't like looking at it. It's like a perfect game in baseball. Just don't talk about it. Right? I don't know. You guys are baseball fans. Perfect game. Just don't talk about it. But one of the hardest things to do is this, right? So the entry is here. Let's say your stops are still back here. And let's say this thing brings you into 100 pips of profit. You're doing the money dance. Money, 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 money. Money, right? And then, right, you turn around and you see this, right? If you're like me, you close your eyes when you dance, right? And you make a weird face. It's cool, though. And then you turn around and you see this. Oh, no. It's reversed. And then it reverses to the part where it sucked up all your profit. You're back to break even, and now you're in the negative. What do you think happens now? Rather, let me ask you guys this. What do you think would be the right choice? Yeah, no more money dance. I see get out. I see reversal. Wait. If you said if you said get out, you're wrong. Your stop loss is there for a reason, is it not? Why would you get out before your stop loss is hit? If you get out before your stop loss is hit, and again, unless you have a very specific reason to do so based on your active management plan, you're basically telling yourself that you had a bad stop loss to begin with. What you should do is stick to the plan. But what most traders do is this, most new traders. Market will creep up and you'll say, you know what, you just need to give it a little bit more breathing room, right? You ever been there? A little bit more breathing room. You ever do that? I'm just going to move it up a little bit. Keel talks about these psychological numbers. If they end in zeros, you got to avoid them. A little bit up here. And then the market creeps up a little bit, and you're like, oh, you know what? 92 for 92.50s. Got to get above 92.50s. That's a strong psychological number there. I'll probably hold a little structure looking left right here, right? We'll justify by any means. A little structure looking left. We'll get above that structure, right? Before you know it, you're up here. Market starts doing a little bit of a reversal. You're like, oh, see, look, I told you. 92.50s, 50, right? And then it starts doing this. And you're like, oh, you know what? Bigger structure, right? We know that a head and shoulders technically isn't invalid until the head is broken. And then, and before you know it, you're stopped about here. And what's the difference? Some of you guys are like, well, I'm stopped out one way, I'm stopped out the other way. You want to see the difference, right? A stop from here to here, you lost 45 pips. A stop from here to here, you lost 166 pips. What's the difference? 120 pips. What's the difference? 3 trades like this. You basically took 4 losers or 3 losers instead of 1? Now, let's say you set yourself up in a position where your average win is bigger than your average loss, which is how it should be, unless you have a very, very, very big win percentage. Let's say your average loss is 45 pips, and your average win is, shoot me a number. Shoot me a number. Your average loss is, let's say, 60 pips, or your average win is 60 pips, right? That's a pretty good position to be in. Until you do something stupid like this. Because now you have to win 3 times, essentially, to make up for that 1 loss. Where before, 1 win would make up for your 1 loss. Now you're screwed. Because the only way for you to get better is to have a higher win percentage. And I'll tell you what, if you're consistently trading a strategy, your win percentage isn't going to change. I hope you understand that. Your win percentage typically is what it is, right? I've been trading since 2007, Forex since 2009. I am always between 45 and 60%. I'm typically about 55%, right? When things are going bad, I'm about 45%. When things are going good, I'm about 60%. I will never be a 90% trader. I'm not all of a sudden going to boost my win percentage that high. I make profit off of keeping my losses small and making sure my wins are bigger. So if you consistently dig yourself in a hole of making your average loss 3 times worse than it's supposed to, what's the solution? How do we get out of that hole? Imagine like in quicksand. What do they tell you not to do when you're in quicksand, right? The first instinct, right? Going into de-stress, right? Stress versus de-stress, right? My first instinct, if I'm ever in quicksand, because I was born in the city, I'm not good with like nature and jungle stuff, is I try to fight. I panic. I'm just going to move my hands and my limbs harder and faster. Now, this may just be from the movies. I don't have any experience in real life, but what happens when you do that in in real life in quicksand? If you panic and move faster, you typically sink even deeper. Right? In trading, the mindset's often this. Okay, I just had that big loss. So the next time this happens, right, I'm just going to make my win bigger, right? Instead of taking my normal profit here, right, I'm gonna let it ride, right? Any of you guys let it ride? I'm going to let it ride and take bigger and shoot for profits down here because I got to make up for that last loss. And unfortunately, I'll let you guys tell me what happens when you do that. What happens when you shoot for bigger profits than you're supposed to? What happens? What happens? Well, the market does this, right? The market comes down. It takes what your normal profit would have been, but you don't take it because you're shooting for this home run trade because you got to make up for that big loss. And then the market reverses. And then boom, either you have a break-even trade, a losing trade. Either way you look at that, you miss profit because you were shooting for more than what you were supposed to shoot. Sound familiar? John says this happened this morning. Yeah, you put yourself under pressure, and not even to mention that. The more pressure you're on, the harder it is to succeed. One of the things, someone mentioned earlier, they love my transparency about being a 50% trader. One of the things that I love about being a 50% trader, and one of the things that I love about knowing my strategy and know where I'm at, I don't have pressure to win. Do you understand that? There's a lot of other pressure and stress in trading. I have no pressure to win. I know I win about 55% of the time. So I don't have pressure. I mean, I couldn't imagine needing to win 90% of the time to be profitable. That is hard. That's 9 out of every 10 trades, 90 out of every 100 trades. If I take 100 trades, guys, I'll be profitable if I win 40. That's a lot of pressure. I mean, that's a lot of relief. It's like a baseball player. You'll be a Hall of Fame baseball player if you can hit the ball 3 out of every 10 at-bats. But they don't teach that out there. They teach high win percentage. High win percentage feeds the ego. I mean, historically, the best traders of all time, especially if you're a trend trader, like Richard Dennis and the Turtle Traders, they're like 30% winning. Did you guys understand that? 30% winners. So we have to flip what's important, and I hope you guys understand that it's not necessarily the wins and losses that are important. It's the sabotage yourself. And these are the problems that many traders are making. So I didn't mean to get down on this path. I apologize, but it was good stuff. I was just supposed to be doing analysis for you guys, but this is what trading is, man. This is what trading is. And the best thing you can do in this situation is this. You see this chart right here? Whoop. Oh, there's another one right here. Okay. Well, it was supposed to go away and you never see it. But there was another one there. But yeah. Just trust yourself. Anybody read the book Pitbull? We're going to go to Euro Yen next. Anybody read the book Pitbull? Not the rapper, pop star? Fireball. Fireball. Yeah, we'll get back to the IPDE, Jack. I got shiny thing syndrome, and I got off track on a whole different avenue, but I think it was worth it. But Pitbull by Marty Schwartz, good book, great book. Made me feel a lot more comfortable about. I don't want to say I failed at money management because I was really good until I made that massive mistake. But it made me realize that even the best traders in the world don't make great money managers, because it's again, my situation was a little bit different because I was spineless and I gave in to my client, even though when I knew it wasn't the right thing to do. But one of the cool things in his book, he got a note from an experienced trader. And the note said, basically, he said, understand that about 90% of the work is done before you ever enter a trade. And that really hit home for me. And it's true. 90% of your job is done before you ever are involved in the trade. Do you guys understand that? This is a Ninja Trader, by the way. And the pattern software, this is something that comes with our subscription. It's called Enigma. So it's a pattern recognition software. So if 90% Pitbull, P-I-T, one T, P-I-T-B-U-L-L by Marty Schwartz, big orange book. It's a good read, really good read. It's not like a trading education book. It's a story, which I get more education out of those books than other ones. But yeah, 9% of your work is done before you ever enter a trade. And that means your analysis. That means formulating your plan on how and why and if you should enter. That means putting your stop loss in an appropriate position. That means putting your targets in an appropriate position. The only thing left, that 10% that's left, that's trade management. But if you can understand and trust yourself enough before you enter the trade, it's going to give you this confidence so you don't make those type of errors. And it comes with experience as well. But it's a good book, Pitbull. This is Ninja Trader I'm on right now. It's my preferred platform, partially because I have a lifetime license and I haven't paid a dime in like 10 years for it. But let's look at another opportunity here. This is the Euro Yen. From earlier, just wanted to update on the trade that we took on Tuesday. And you can see that we just rallied down to our target. So we're going to close this one out. 121 pips, man, on a simple trade. 121 pips on a simple trade. And I want to bring this up because this trade was taken on Tuesday. Correct? You guys remember this? Bear bat pattern, bigger head and shoulders pattern here on Euro Pound. Tuesday.
Sure do.
What day is it today?
Thursday, man.
Thursday, right? 2 days in a trade. We had a lot of questions throughout the week about, what is a typical time period per trade? And we talk about day trades being in there for minutes to hours, perhaps swing trades from anyway from hours to a few days. This is what it looks like trading with discipline. We entered the trade Tuesday. We didn't look at it again. Right? You trust yourself, you trust your plan, you trust your analysis. We did everything beforehand, right? We found the entry. We found where we want to put stops at, our protective stop loss. We decided where we want to place targets at. We entered the trade. And then what happens after that? You wait.
All the hard work's done.
Yeah. Do you guys see, and I'll give it back to you real quick, Jason, but I want to show you guys what happens in between these trades. If we kind of just delete all of our data right here, look at this. The initial entry is here. We're shooting for targets down here. We went all the way down to here. What do you think happens at that moment? You excited? You happy? What put yourself in these shoes? How are you feeling? You're excited. You're pumped. Is anybody counting the money already? I think this was about what, 70 pips or something like that. Woo-hoo, 70 pips. What am I going to buy? And then what happens? We almost give all of it up. We go from plus 70 to about plus 20. Psychologically, what do you think happens to you then? Bryce says the agony of defeat. Are you scared? Now, Tiago said, still bearish, no violation of the highs. And that's spoken as a true trader, Tiago. So that's the difference between the process and outcome. You understand what needs to happen in order for the trade to be violated. Structurally, right, technically speaking, we never did anything to put yourself in fear. But most newer traders don't understand the technicals. They don't understand what price can do, right? And they psych themselves out of the market. And you see something like that, you're counting all this money, you're up, and it comes all the way against you. Many traders do what? They get out. I'm just going to take my 20 because it looks like the market is going to reverse against me and blow me up in my face, and I'm going to lose 40, and plus 20 is more than minus 40. And they sabotage themselves. And then the market dances around. This is all within a 2-day period. Now, again, we're not watching this because, that's something that professional traders don't do. It'll drive you crazy. But a 2-day period, we're bouncing back and forth and back and forth and back and forth. And even here with this green bar, right? Back down to previous structure lows. And then guess what? We reverse off that level again. You're like, triple bottom, structure's holding as we reverse again. And then finally, we push down and we achieve targets. This is not easy. And for the longest time, I was a habitual early target taker. I was a habitual stop mover. Until I had one trade that really made me trust myself. And I remember I was in a live trading room with my trading mentor, Jason Stapleton. And it had to be like a Thursday or a Friday. I think it was like a Thursday. And we took a trade on the New Zealand dollar. And I took the trade because he took the trade. I probably shouldn't have been doing it, full disclosure, but I was following them. Yeah. I didn't do all the right things when I was learning. But I took the trade because he took the trade. And I remember waking up the next day and the trade was up 50 pips. This was a bigger trade. So target ones were 200 pips, target twos were 400 pips away. And I remember waking up Friday and we were 50 pips up. What do you think I wanted to do? I wanted to take my profit so bad. And normally I would have, but I was at this rebellious state where I was like, oh, my trading mentor keeps telling me to be disciplined and process over outcome. And I'm going to show him. I'm going to stick with this trade and it's going to blow up in my face and I'm going to send him an angry email. Right? My caps lock button was already on, ready for the angry email, the yell fest. And I stuck with it. And I went to bed Friday. I think it was up 50 pips. And I went to bed. So I'm going to hold it over the weekend, right? So we got back into the live room, I think Monday or Tuesday. Probably Tuesday because it was we did a Q&A on Monday. Price had hit target once. 200 pips. And I remember Jason Stapleton going into the room. If you guys know Jason Stapleton, you know, he's a showman. So he's coming in, right? Just all the swagger in the world in his walking to the live room. Guys, how about New Zealand dollar? And it's like me and like 5 other people that are like, yeah. And no one else is excited. He's like, what's wrong, guys? We just banked 200 pips. You made a month's worth of profit in the last few days. He says, you guys didn't, you didn't take it. Don't tell me. More than half the room or half the traders that were in the trade took profits early. I even spoke to my roommate downstairs who was in the same trade, and I was all excited. I was ready to go down there and chest bump and butt smack, right? I'm a former athlete, so butt smack is cool. We do it all the time around the offices. Virtual butt smacks for Jason over in the UK. Pow. And he had his head hung low. And I said, why? He said, I closed out Friday for 50 pips. And it was an awesome lesson because we got 200 pips on the first target. The second target ended up being 400 pips. It was a 600 pip trade. And as you can tell, the trade that stands out for me was the first time I ever followed my rules and kind of sat through the ups and downs, and it paid off. And I say this, right? I bring this up to you not because I don't really care that you see how much money I made in the market. I can care less. I'm at the point where that doesn't matter. But hopefully for someone out there, it proves that patience pays, that discipline pays off. And it's hard to develop that. It takes time. It takes experience. But once you make it through that first trade where you really just trust your plan and you ignore all those emotions and psychological demons that are telling you to do other stuff and you see the payoff, it just increases that belief. You really start to believe in yourself and your discipline. You really start to believe in your technicals and your ability to read a price chart, right? And the more you believe in yourself, the more likely you are to take the right actions. What happens when you take more of the right actions? You start getting more of the right results. All of a sudden, you start winning more trades. You start getting more on your wins because you're not sabotaging. You start taking less on your losses because you're not moving stops back. And then as you get those right results, what do you think that does to you as a trader? Do you become less confident or do you get more confident? You get more confident. You start to believe even more. You're like, man, this stuff isn't voodoo magic. This stuff actually works. This thing hit the moving average and closed in the upper 30 to 50%. This works. And then your belief gets stronger. As your belief gets stronger, you start to run on autopilot. You're taking more of the right actions, right? That unconscious competence state. You take more of the right actions, you get more of the right results, right? Belief, actions, results. Belief, actions, results. Belief, actions, results. And partially, I was hoping this thing continued to run down because another error that traders make is they take profits here. The thing runs down for 50 more pips. And then they start beating themselves up over not catching all the profits, right? How many guys want to catch all of the profits? How many guys have gotten mad when you've seen a trade, you've taken off money, and then it continues to go in your direction? That's tough as well. But understand that we're just looking to get in and get out. This is a game of safety, right? We're not looking to catch the ultimate bottom to the ultimate top because if you do that, right, you're going to get burnt more times than you're going to get rewarded. We want to analyze the markets. We want to put our stop loss in a smart position. We want to put our targets in a smart position. We want to get what we came to get. I've been watching Money Heist, so I'm all about this robbery stuff. We want to get into the bank. We want to grab the money we're supposed to grab. We're going to leave all the other stuff, and we're going to get out before the cops come. If the market continues on, great for the market. But we've done our job. We've done our job. All right, Greystone. Sorry about that. But just I thought there was a great opportunity just to show trading psychology and just what a swing trade looks like. It's a short-term deal, man. It was, 5 minutes of analysis, right? Sat in it for 2 days, 130, 120 pips of profit.
Yep.
And
Well
you
done,
just
man.
do that
Nice.
over and over again.
Perfect. Well, what a great end to the.
So I hope you guys enjoyed that video, and I hope you're able to take away some good nuggets from it, both on the technical and the psychological side. Of course, if you want to watch the full recording of our 4-day event, you can do so by clicking the link in the description box below. And also, before you leave, remember to hit that like button, share, leave me a comment, and if you are brand new, subscribe. All right, I hope you guys have a great weekend. I'm excited to work with a brand new group of traders. And until next time, plan your trade your plan. Take care.